Tips to improve your credit when you apply for a mortgage. Hey everyone, thanks so much for joining me today. My name is Jeff Trevarthen and I'm Jeff the Mortgage Pro. I do appreciate you watching my videos. If you like them, please make sure you hit the like button down below for each of the videos that you're watching. That helps me get my message out to more people. And if you like the different information I'm providing about mortgages, please make sure you subscribe to my channel. I try to put these videos out at least a couple times a week so that you can get alerted from that and you subscribe. That would be awesome. I'd love to hear from you on those. So let's jump right into our topic today. We're talking about tips to improve your credit when you apply for a mortgage. So a lot of people have different definitions of what credit is, and it's all over the board really for what is good credit and what I would say not great credit. I'm not going to use the term bad credit. So good credit is usually anything that I would define probably over a 700 credit score, and not so great credit is anything probably under a 700 credit score. And then even worse credit is probably under a 600 credit score, but it doesn't matter where you are. There's always a starting point for everybody. If you have great credit, that's awesome. You don't have a lot of work to do, but if you have, not so great credit, there might be some work you need to do to be able to get the most optimal financing for your mortgage. So the first thing that I would say is the mortgage algorithm weights two things very heavily. And the first one is the proportion of credit balances to your credit limits. So for example, if you have a $1,000 credit limit and you're utilizing $900 of that $1,000, you're using most of your credit. You're using 90% of your credit right there. And that's a lot. And that's not ideal. And that's going to negatively impact your credit score. So what you want to try to do with your balances is keep them under 50% first, and ideally under 30%. And the most ideal would be to pay them off every single month, so you're not carrying a balance from month to month on your credit cards. I think that will help you a lot if you just follow those rules. Do the very best you can to start knocking away at credit. If you don't have any extra money right now, maybe you need to get a second job or a side hustle, as they like to call it today, and just try to chip away at paying down that credit and focus on one of the credit cards first, the one particularly with the highest interest rate, and knock that one down first. And then once you get that one, roll that new payment over to your second credit card and really snowball the debt payoff on that particular credit card. So try to make sure that your balances are below the credit limits. The mortgage algorithm actually weights that over 30% of your credit score. So super important to keep your balances down, especially on your credit cards and your revolving accounts like that. Anything that you have as a fixed payment, just make sure you make the minimum monthly payment on time every month. You can always pay more, but you can never pay less. That's my motto when it comes to making monthly payments on debt. And then the other thing that the algorithm weighs very heavily is your payment history. And what I mean by that is your on-time payment history. You want to make sure that you make your monthly payment on time every single month, whether it's a mortgage, a credit card, a student loan, whatever it might be. Make sure that you make that payment every month. So what happens if you make let's say you make a late payment? What happens to your credit? It drops significantly, like 100 points right away. And then over time, the farther away from you get away from that late payment, it'll slowly, gradually go up. So if you had a late payment on something 2 or 3 years ago, it's probably not going to matter that much for your credit report. But if you just had a late payment last month, it's a negative impact on your credit score, and it's really hard to get your credit score up quickly because you've had that late payment. So that is also weighted very heavily in the mortgage algorithm when it pulls your credit, somewhere around 30% as well. So two things are accounting for almost 60% of the mortgage algorithm that's pulling your credit. So on-time payment history again, and the proportion of balances to credit limits, make sure that you keep those down on your credit. So I have a couple similar tools that'll help you out with this. One is called a what if simulator, and the what if simulator will allow us to go, okay, how do we get your credit score to 700? And it'll tell us exactly what we need to do in order to get that credit score to 700. It might be to pay off this balance or move some of this money over here, and it'll tell us exactly what to do to get to that credit score. And the other one is if I have X amount of dollars to spend, so let's say I have $5,000 to spend of discretionary money, and I can pay off this or move payments over here or open up a new credit card and then pay this one down. It'll tell us exactly what we need to do, or when we spend that money, it'll tell us what our credit score we can achieve for each of the 3 different credit bureaus. When we run this, I have X amount of dollars to spend, type of a credit improvement thing that we have as mortgage originators. So 2 tools that we can use to help you out. And if you have, not so perfect credit, love to help you out on this, especially if you're looking for a mortgage coming up down the road or in the future. If you have any questions at all about this, please make sure you reach out to me. My Calendly link is down below, and I'll get on the phone with you for 15 minutes and love to chat with you more about your mortgage and your future plans. Thanks so much for watching, and I look forward to chatting with you again really soon. Have a good day.